So let's face it, there's a lot of student loan debt out there. Let me read you an interesting fact. In 2019, there were 45 million borrowers who collectively owe more than $1.5 trillion in student loan debt. The student loan debt is the second highest category next to, of course, mortgage debt, and higher than both credit cards and auto loans. Fortunately, a portion of the student loan interest is actually deductible on your tax return. So generally speaking, other than mortgage interest, most interest paid by consumers are not deductible on tax return. However, as it relates to student loan interest, there is actually an above-the-line deduction, which is, again, a deduction that helps you arrive to adjusted gross income available for student loan interest. The maximum loan interest that you can deduct on your tax return is $2,500. Now, this isn't indexed for inflation. For now, this is the maximum amount that you're gonna be able to get. And by the way, it's subject to a few phase-out exemptions. For single individuals, the phase-out begins at $70,000 and it finishes out completely at $85,000. For married individuals, it's simply double, so it'd be $140,000 and all the way through $170,000. What that effectively means is you're gonna be able to get the full $2,500 of interest, assuming you paid $2,500 of interest during the year, and under $70,000, and then you'll start to see it gradually phase out all the way up to $85,000. So who can take the student loan interest deduction? Well, it can be the taxpayer or the taxpayer's spouse, and also if you paid for somebody else, typically your dependent, you're also eligible to take that deduction. It must be paid or incurred within a reasonable time period, and it's got to be basically for education provided for an eligible student. Now, there's two categories you have to consider which are not eligible for the student loan interest deduction. One would be basically a personal loan, and the second would be from a qualified employer plan. Now, the type of costs that are eligible for a loan that would then be therefore eligible for student loan interest deduction would be for tuition, books, and lodging, and other related expenses as well, such as transportation. Lastly, you should know that primarily student loan interest deductions are reported on Form 1098-E, which is sent to you sometime after the year end, and you can take that amount subject to a $2,500 limitation and report that on your tax returns. So we hope you found the student loan interest deduction informative and helpful. If you're interested in learning more, feel free to send us a DM or a message below.